Please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
It's a good-looking screen you have. After a while, we're seeing some stability on the way up. So I think the bulls are a bit relieved there. But what about the commodity space? Manisha joins in. Manisha, a fall in crude. The equity markets like that, but tell us more.
Well, yes, on its own, it's not a very good-looking screen, but as you said, it's good for the equity market, so we will take it at that. And what a decline that we have seen come in for the crude oil prices, 2% overnight, and much of that actually has been factored in by the Indian prices also. Remember, we'll trade till 11:55 in the night. So what we are seeing right now is what's happening in the Asian markets. Crude oil prices have declined 4.5% for the Brent and 5.5% for the US crude prices in this week. And all of that really goes in, one, of course, to the strengthened US dollar, which is trading at a 2-week highs. And the other part, of course, is the US production, which is at a record highs for the month of November, December and January as well, and is only expected to go higher if you read all of those global energy reports. No such luck for the gold and silver prices as well. We seem to be breaking key psychological levels in that space, just about holding $13.10 per ounce in the global markets, and we've broken below that 30,000 mark for the Indian gold prices as well. The silver as well is under pressure, 0.5% of a cut coming in yet again for this one as well. If you look at the silver prices, we are down 3.5% for this week for that too. The base metal prices, well, the New York session yesterday was not something to write home about. We saw nearly 3 to 5% of declines coming in for the metals as a sector. But there is opportunity buying coming in on your screens right now. Also, the expectation that China would be restocking ahead of the Lunar New Year holidays. So every dip will be bought into. And of course, the China trade data is something that these markets are reacting to as well. Trading strategies, and it's a sell call across board coming in from Angel Commodities. In case of silver prices, they're expecting it to slide further to 37,400. They also continue with the sell call in case of the crude oil prices, where they are expecting the prices to continue to decline. We already have seen a breach below 4,000. 3,900 is the next level that they expect to see today.
Okay, Manisha, thanks a lot for that. Well, let's move on then. Prestige Estates had a quiet third quarter, but the bigger news is the company has entered into a partnership with HDFC Capital Advisors to the tune of 2,500 crores for the affordable housing segment. What does that mean for the company? Irfan Razak, CMD of Prestige Estates, is with us now. Mr. Razak, good morning. So first, tell us about this partnership. Give us some details. How much are you eyeing in terms of this segment now?
No, this is a strategic partnership that we have done. It's a platform deal with HDFC. Gives us more strength to tie in more lands and get into mid-segment housing. And this is across pan-India, whichever city we feel is going to give us enough returns. So we are looking currently at some lands in Bangalore and Hyderabad, and maybe going forward in other cities in the west and north also. But for the time being, the commitment is there, and I think this will be a good, strong partnership which will infuse more capital into the system and help us to grow the business more.
Money in it, Mr. Razak, and when does it start flowing in?
Yeah, it's almost immediately. I think we've already inked the agreement, and now the thing is we are evaluating several properties. We've even shortlisted a few. Unfortunately, I can't spell out those details just now, but I think we are on track to tie up some few properties which we will be working together in, and it's a partnership which I'm sure will add credibility and also will give us that much more strength to work, and it's a combination of more equity than debt. So it's a win-win situation both for us as well as HDFC Capital.
No, what I meant is, how much do they bring? How much do you bring?
See, they bring in about, their commitment is totally 2,500 crores, and it's as I said, it's a combination of equity and debt. And we also have to chip in our share, and our share would be roughly about 25% of the overall contribution, and that helps us to add up more money into the system.
So this land that you're buying, in terms of a timeline, by when do you think you could close some of those deals? And also, will it be mostly in urban, or are you looking at even semi-urban areas?
It will be mostly urban areas, and this will, and these will be some. We are looking at some large transactions, and I think in the next 60 days we'll have a few deals which will be really happening on ground, and then we can move to the next step.
What are the margins in affordable housing vis-a-vis your legacy business?
The margins would remain the same. See, I mean, affordable housing, it's more on the size of the unit, on the overall ticket size, all of it. But I always say, as long as it's priced right and built right, it need not be anything which is mediocre. It will be a similar product that comes from our stable, which is the mid-income group. And at the end of the day, it's the customer who will be happy with the product, and at the same time, margins for the company will not erode.
Okay. What kind of growth are you seeing in the affordable housing particularly, and do you think that it could get boosted? Because, you know, in the budget we did hear that the government has asked builders not to charge any GST from home buyers that are getting into that are generally buying these affordable houses. Will that really help? And what is your own target as far as industry growth and affordable housing is concerned?
I think the market is at that spot. You see, basically affordable mid-income housing is where the market is, where the demand is, where the actual growth can come from. So we are looking at some pretty large numbers. Now, the only thing is the most important part is once you've identified the land, got into it, it's about conceptualizing and getting the plans approved. Where we hit roadblocks is, certain times the approval process becomes slow. And I'm not talking about one single approval, it's the overall gambit of approvals that we have to get. And that is where the overall process becomes a little slow. Like environment or even the local bodies, everything else, if all that is speeded up, government is committed to do it at a faster pace, and that way even the cost also can be brought down because the holding cost comes down. And that will help us coming to the market quickly and again encashing on the overall demand, and it becomes a win-win for all, the buyer as well as the seller.
Okay, just a final question. Didn't you guide for 10 million square feet launches? We didn't notice too many in the third quarter. Will you be able to deliver?
Yes, we did guide for 10 million, but then unfortunately we got hit by RERA and so many other legislations that came in. Now the good news is we've got some 2-3 large developments which have finally been approved, which have been logged in for RERA. And this quarter, I believe that we'll have some substantial launches, and that will add up to the overall meeting the overall target of the guideline that we had given. And also it will boost up the operational highlights of more sales during this quarter. We've got one project which is approved and lined up for launch in Chennai, 2 in Bengaluru. So both these put together, all three put together are pretty large, and they'll add up to a substantial amount of area that will be launched.
Sure. Well, we now need to look ahead to the working day, the trading day. We're going to see a lot of results being announced. And here's a quick preview from our research team on some of the major numbers. First of them is ACC. Nigel, how do you expect they'll perform?
Well, the numbers will look good, Latha, on a year-on-year basis. They look very good. On the top line, we're factoring in a growth of close to around 20% or thereabouts. Remember, that's going to be led by higher volumes because pricing hasn't been really that great. ACC has pan-India presence. In terms of the top line, we were looking at a number of around 6.5 to around 6.4 million tons. That's the sales volumes numbers. This should be a growth of around 18 to around 19%. So the remainder will come in because of realizations. Why are volumes higher when the rest of the industry hasn't grown so much? Well, they expanded capacity at Jamul as well as Sindri. So that's one factor. Besides that, in terms of realizations, remember, they've been focusing on, their premium products. And that's what will help realizations a tad bit. Operating profit as well should come in higher by around 43%. It'll expand margins by around 100 to around 150 basis points. That's primarily because the operating leverage will play out, point number one. The second factor is that, in fact, pet coke prices have gone up, so it will limit the benefit in terms of margin expansion. Profit number as well comes in higher by 240%. That's because, in fact, a better operational performance as well as the same quarter last year, we did have an exceptional item. So expect a good set of numbers. I believe the numbers will be out by around 2 p.m. today. Back to you.
Okay, Nigel, thanks a lot for that. That's ACC. Pharma's doing well today and Glenmark will be in focus. Ekta, what are we expecting?
Well, you know, this quarter is going to be interesting for Glenmark because it comes on a high base impact. Same time last year, we had the impact of Zetia generic, the cholesterol drug that Glenmark had exclusivity on, and hence because of that, the numbers are going to be look weak on a year-on-year basis. So what we have to work for is basically the commentary. What exactly the US business looks ex of Zetia, and what might the pipeline be going forward for Glenmark, and what exactly pricing pressure is looking like. The last time they had spoken about double-digit pricing pressure. They have a strong India portfolio, so a bounce back in the India portfolio would be something that the street would take with both hands because of the strong dermatology franchise that they have. And debt reduction, what the plans are with regards to debt, would be another key factor to watch out for.
Okay, thanks a lot for that. So apart from Glenmark, you also have Bharat Forge that will be reporting their numbers, and the stock actually is up almost 2.5% ahead of its numbers. If we can just get the chart for you, expect it to be a good showing this time around. So a lot of non-index large caps coming out with their earnings today.
But I think as we wrap up on Bazaar, it's the mid caps that are absolutely taking your breath away. The Sensex and the Nifty also up 1%, but mid caps up 1.3%, and some of them are doing exceptionally well at this point in time. So it looks like at least for the day, the bulls have got their mojo.
Oh, yes, they have. And you know what? A lot of non-index large caps, clearly that's the space which has done well. And a lot of companies coming out with numbers. These stocks are doing well. Take a look at a few stocks. Cadila Healthcare, for example. That's at the high point of the day. I think comes out with numbers later in the day. Just take a look at Page Industries. That's one stock which has, of course, been really strong for the last couple of days. Is going into the numbers quite strong. So that stock has moved to high point of the day, again comes out with numbers. So a lot of these stocks are doing well, and let's see, for now, high point of the day, 365 points higher on the Sensex.